Hi traders, in this video I'm going to outline to you a currency pair that looks really interesting for buying at the moment. It's the New Zealand dollar Japanese yen pair, and I'm going to share with you why recent policy announcement by the Bank of Japan as well as the upcoming RBNZ interest rate meeting could mean that this is a great time to buy the New Zealand dollar Japanese yen heading into that RBNZ rate decision. I hope you enjoy this video. Please watch it as I outline the risks and also the potential entry, as well as the reason that the New Zealand dollar Japanese yen outlook looks so promising at this point in time. In this video, I want to explain to you why the New Zealand dollar Japanese yen could be at a perfect point to look for longs. Now, let me just explain the rationale for this. One of the key concepts in currency trading is you always want to pair a weak currency against a strong currency. You want to see a greater chance of one currency gaining against another. And there are good reasons to expect New Zealand dollar strength and good reasons to expect Japanese yen weakness at the moment. So let's go through the rationale. First of all, let's look at reasons for New Zealand dollar strength. On my blog, which I publish daily at blog.hycmlab.com, I've given 4 reasons for New Zealand dollar strength ahead of the RBNZ meeting. The RBNZ are meeting on February the 23rd, and they have a number of issues that are really needing the RBNZ's attention. One, headline inflation. It's coming in very high, a 31-year high. 2, the property market is very expensive. According to the OECD, house prices have risen 28% year on year. That's higher than Australia, Canada, Norway, and the US. Very low interest rates have been encouraging investment into property, which has resulted in a surge in property prices. The only way the RBNZ can control that really is by hiking interest rates. We've seen a number of investment banks changing their bias. ASB, Kiwi Bank, ANZ have all revised higher their RBNZ forecast. That's in line with the OECD's recommendation that the RBNZ must act quickly to control a hot economy. Despite all these very good reasons for New Zealand dollar strength, the New Zealand dollar has actually been the weakest currency of the G8 currencies this year. I was very surprised when I saw that statistic. So the New Zealand dollar looks extremely cheap. If there's a time for the New Zealand dollar to gain, it's got to be now. And if it can't rise now, then you have to question whether it can rise at all. So as we approach the RBNZ meeting, I've been looking from early Feb, Aussie New Zealand dollar downside, New Zealand dollar CAD upside. But there is also a medium-term bias for Japanese yen strength, New Zealand dollar yen strength because of Japanese yen weakness. Now that's because the Bank of Japan has agreed to try to defend the yield curve on Japanese bond yields on the 10-year Japanese JGBs. Now, what Bank of Japan's Governor Kuroda has recently said that they will conduct further unlimited bond purchases to keep bond yields within the central bank's target range. And their target range is plus 0.25 and minus 0.25. So essentially, if you don't understand this, when the bond yield rises, it's because higher interest rates are expected. Now, yields have been rising across the world because central banks have been expected to hike interest rates. But what the Bank of Japan is saying is they don't expect to have to raise interest rates. So that means structural weakness for the Japanese yen looks likely to carry on and is being encouraged by Japan's central bank. So this means that the Japanese yen structurally should remain weak over the medium term. Also, Japan's inflation is much, much lower than the rest of the world's. Now, Japan has been in what's called a deflationary environment for years. And of all the major economies, Japan's inflation is still very low. You can see, that the growth in consumer prices slowed to 0.2% in January from a year earlier, compared with 0.55% in the previous month. So that drop, you see, in that the BOJ wants to get inflation up to 2%. And look, around the world, people are having, UK 4-5+%, expecting 7% in April. US 7%. Look at Japan, 0.2%. So that means it's very easy for the Bank of Japan to communicate the need for persistence with monetary easing. Okay? So that means structurally, weakness for the yen makes sense. And we had at the end of January, OECD saying New Zealand needs tighter fiscal policy as economy overheats. So do you see now that very clear bias for New Zealand dollar yen upside? The RBNZ expected to hike. Bank of Japan expected to keep rates on hold. Now look at the bond yield spread. That tells you all you need to know. The New Zealand 10-year, Japanese 10-year bond yield spread. See how price tracks it? Now this is moving higher. And which would you expect? Would you expect the bond yield spread to drop lower to price, or price to move higher to the bond yield spread? Look, we expect price to move higher. So the target is 82. Stops can be put just below that 100, 200 exponential moving average. Any drops lower look very good value heading into the RBNZ meeting next week. Now, risks. Every trade outlook has risk. Risk number one, the RBNZ surprise markets and they're more dovish than expected. Risk number two, that there's a heavy bout of yen strength on maybe a Russian-Ukraine flare-up. So if Russia do make an incursion into Ukraine, you'd expect the yen to find bids and the high betas to weaken, so that would weaken the pair. Thirdly, does the Bank of Japan change their monetary policy stance? They're the three major risks. Otherwise, stops below 75, looking for a move up to 82, makes sense, heading towards the RBNZ rate decision on Thursday, February the 23rd rather, of this week. I hope this has been helpful. If you found this video helpful, please follow along on my blog at hycmlab.com. You can just follow me here, blog.hycmlab.com. You can also follow me at Twitter at Giles Coughlin CCA, and you can also connect with me on LinkedIn for other analytical pieces. If you like this video, please do share it. Hit like, give it a thumbs up, show some support, always much appreciated. Thank you very much.